Dan Ives just said it straight. Nvidia chips are the new gold or oil. That's how critical Nvidia has become to the global AI revolution. In his new interview with CNBC, Dan Ives, global head of tech research at Wedbush, breaks down China's pressure on Nvidia, the opportunities opening up for Chinese tech, why the UK is becoming a hotspot for AI investment, and even how crypto is intersecting with AI as regulation heats up. Now, I'm going to play you the clip of Dan Ives on CNBC, and right after that, I'll give you my own detailed reaction and breakdown of what he said. Then, I'll share my in-depth analysis on some of the best industrial stocks to buy right now. So, stick around, because if you only watch one investing video today, this should be it. Make sure to smash that like button. Let's see if we can hit 1,000 likes on this one. Drop your thoughts in the comments, and don't forget to subscribe so you never miss my next big investing update. Alright, let's hear what Dan Ives has to say.
We see Nvidia shares down about 1%. How meaningful is this, at least in the near term, for Nvidia sales? Because we keep hearing that Chinese sales, they weren't really factored in the guidance. So why is the stock moving like this in the pre-market?
Yeah, look, it's a shot across the bow, obviously from Beijing. But look, part of the issue here is that, and we see it, all the big Chinese tech players, they're going to want NVIDIA's chips, right? I mean, there's one chip in the world fueling the AI revolution, but it speaks to this sort of balance that you're going to have to see. A lot of sort of regulatory scrutiny. But when it comes to, look, when you look at the upside, how you get to a $5 trillion market cap for NVIDIA, China is a key part of that story. But I believe here the bark will be ultimately worse than the bite.
All right. I know this is just crossing again. China's biggest internet regulator is telling domestic firms to stop buying Nvidia chips, terminate existing orders. According to this FT article, Beijing, and this is their words, they summoned domestic chip makers, including Huawei, 𝗗𝗚𝗏, and Alibaba and Baidu, and kind of tested those chips and found they were at least comparable to the Nvidia chips. I know it just crossed, but have you heard similar things coming out of China that they already have chips that are at least comparable? Maybe not at the exact same level, but comparable.
Yeah, Frank, they're comparable. Like, I'm playing Bethpage Ryder Cup in September. I mean, the point is, like, NVIDIA's years ahead of these other chips. And look, that's the reality, right? I mean, there's some grandstanding going on there. And that's why when you look at these Chinese tech stalwarts, they want that NVIDIA chip. That's the new gold or oil. And that's some of the challenge that Beijing's going to have here. Remember, Trump administration knows the biggest chip on the poker table that they have are the NVIDIA chips.
All right, we're going to go to our Eunice Yoon live in Beijing right now on the CNBC Newsline. Eunice, good morning. Can you share with us the latest that you're hearing there in China?
Frank, what we see in this FT report is that China's cyber watchdog is ordering local companies not to use an advanced chip by NVIDIA that's used for automated manufacturing. This is called the RTX Pro 6000D. The newspaper says that this is because the regulators want Chinese companies to use similar chips that are produced by Chinese companies, and this would include Huawei. Jensen Huang on a trip in Beijing introduced this chip in July, and what's interesting, I think, is that this report follows news earlier this week when regulators had said that NVIDIA violated antitrust law, and it also comes after we've seen similar pressure by the government to dissuade Chinese companies from using NVIDIA's H20 after the Trump administration had changed its policy and allowed NVIDIA to sell the product in the summer.
I want to look at Chinese internet stocks right now. They're moving significantly higher. Now, some of this is on some reports that Baidu is seeing some improvements in its AI business. They actually got an upgrade this morning from a U.S. firm. Those shares up about 8% last time I checked. We're also seeing Alibaba move higher. So just on the margin, at least for today, on the news, is this a positive sign for these Chinese internet stocks? The fact that Beijing at least is saying they can make comparable chips, and also the idea that they're going to lean more in their domestic AI industry and their domestic tech industry?
Yeah, and she was making great points in terms of for the domestic players. Look, this is bullish for Chinese tech, and it's part of our view. We're bullish on Baidu, because what this means is that, look, even when it comes down to it, they are going to get a significant share of what's happening in China. But look, this AI revolution, it's not just U.S. It is in China. NVIDIA clearly is going to play a huge role here, but this is very positive for Chinese big tech. Those stocks are going to be up today.
For people listening right now, looking at Alibaba, those shares about 2.33%, Baidu up about 8.5%, PDD Holdings up about 2.25% right now as well. So seeing some upside moves when it comes to those names. I want to shift gears just a bit. We have a lot of U.S. tech leaders in the United Kingdom with the president talking about investments just across the board. So I think I have a question for you similar to the one I would have had for our UK reporter, but we ran out of time. Why the UK? Why right now? Why all of a sudden?
Look, I think if you clearly see like they're trying to plant the flag, right? In terms of like the view that if you have an opening for AI, and that really has not been the issue in Europe, you're going to see companies like, you look at Google, you're going to look at Oracle, Microsoft and others. I mean, everyone's trying to figure out who's going to be the one that gains share there. And I think you're starting to see that market open up. A lot of changes that we've seen over the last, week or two.
But why the UK? Why not Europe? You have also SAP, biggest tech company in Europe, obviously on the continent. Why focus so much attention on the UK?
Regulations. I mean, the biggest problem right now in EU is Big Brother watch. I mean, it's hard. I know any sort of tech startups, they're moving to Middle East, Asia. That's why UK, if you're planting a flag as a tech company, it's there. Also think about data centers. I mean, how many data centers you're going to need in terms of this AI build out. That's why this is happening. That's why these investments are happening.
Is there incremental revenues? Is there incremental customers to be gained from these companies by making these investments in the UK? Again, Europe is a continent. They have the EU, and the UK has separated itself from it. Doesn't overemphasize in the UK, does that diminish at all the possibilities in Europe?
I view it as sort of not mutually exclusive. I mean, This is really just the start of what's going to be a broader build out. Regulations is the key, right? But you're seeing it around the world. Look what's happened in the Middle East. We're seeing in Saudi and UAE, and that's what we're seeing start to happen in UK, and that will spread across Europe.
All right, we're going all around the world. We're going from China to the UK. Let's come back to the US. You were down in DC yesterday, meeting with lawmakers to talk about crypto and crypto regulation. I know you put some pictures up on your social media. Yep. I'm not sure if you gave them to us yet, but it was you, it was Michael Saylor, it was Tom Lee, three obviously very notable crypto voices. What were you hearing from lawmakers? You met with lawmakers like Ted Cruz and Tim Scott, both senators.
Yeah, I mean, and we met with a number of senators as well as members of Congress. Look, our view, being down there in D.C., it's also about the Bitcoin reserve. It's the view that it's the legitimization of what's happening in crypto. And as industry leaders, of course, Michael Saylor, Tom Lee, and many others, this is not stopping. This is actually just the start. I could tell you as chairman of 𝗗𝗏, in our view of world and where everything's going from an authentication and human proof, Frank, this is just the start of what's not just on crypto, but it's AI and crypto. It's the intersection.
All right, so the intersection, that's really what your company, again, you mentioned you are the chair of 𝗗𝗏. We want to make sure we disclose that to the viewers because we're going to show the chart. Month to date, huge spike in this company. Shares up. Last time we checked, it's a company that's obviously moving a lot, up about 600% just this month alone. When we're talking about 𝗗𝗏 and the coin that you're going to put out, also this company backed by Sam Altman from OpenAI, how do you expect it to be received in the market, and where does it fit in the crypto ecosphere? Bitcoin seems to be a payment vehicle, at least in some ways. Ether seems to be a platform that Wall Street wants to build on. How do you see your coin fitting in?
I mean, the reason that I'm doing it is the intersection of AI and crypto. I mean, when you think about utilities and human proof, everything that we're doing with the orbs, I mean, this is really going to be a key layer in the build out of the AI revolution. And when you think about our view of world in terms of that being significantly undervalued and the whole goal of this, I think this is just the start in terms of what I view is really the build out. You have 16 million, if you think about it, on this platform.
But is it for payment? Are people going to build on it? Like, what are they going to do with the world coin? You mentioned the human proof part, and over that time we had our 𝗗𝗏 come on and talk a little bit about it. Yep. You've come on and talked about it. But what do you see the use case being?
I think the use case is going to be you're going to have 50 million, 100 million on this network. The monetization of it is really just going to start. And I think what you're going to see now is that this is something from advertisers to governments to other sort of verticals. This is going to be a de facto standard in the future of AI, and that's something I talked about in DC.
First off, the interview opens with talk about Nvidia and this reported move from Beijing to push Chinese companies away from using Nvidia chips. The anchor asks, how meaningful is this really, if Nvidia's own guidance didn't factor in Chinese sales that much anyway? Dan responds by calling it a shot across the bow. What he means is it's more of a warning shot from Beijing rather than an immediate knockout blow. Now the important part here is that Nvidia is still the dominant player in AI chips. Dan highlights that every big Chinese tech player, from Alibaba to Baidu, still desperately wants Nvidia chips. Why? Because right now, Nvidia is years ahead of any competition. So even though Chinese regulators claim their domestic chips are comparable, Dan calls it grandstanding. In his words, Nvidia's chips are like the new gold or oil. That's a powerful way of putting it. He's basically saying these chips are the lifeblood of the AI revolution, and China knows it. At the same time, Dan makes a key point. If Nvidia is ever going to get to that massive $5 trillion market cap people speculate about, China has to be part of the growth story. He's not dismissing the risks, but he's saying the bark will be worse than the bite. Translation: Beijing may posture, but in practice, they can't fully turn away from Nvidia without hurting their own AI ambitions. Then the conversation shifts to Chinese internet stocks, Baidu, Alibaba, PDD Holdings. On this news of Beijing encouraging domestic chip use, their stocks are actually rallying, and Dan agrees this is bullish for Chinese tech. His reasoning? Even if Nvidia dominates globally, there's still going to be plenty of room for local champions in China. Domestic AI growth is real, and these companies are positioned to capture it. So he sees upside for those stocks in the near term. After China, the interview pivots to Europe, specifically why so many US tech giants are investing heavily in the UK right now. Dan says it's all about planting the flag. The UK is seen as a more open, flexible regulatory environment compared to the EU, where Dan bluntly calls out Big Brother Watch as a problem. He's saying that the EU is so restrictive on data and regulation that it drives startups elsewhere, like the Middle East or Asia. So for companies like Google, Microsoft, and Oracle, the UK is the natural entry point into Europe for AI investment and data centers. And this is important. Dan views these UK investments not as replacements for Europe, but as the first step in a larger rollout. Once AI infrastructure is in place in the UK, it'll spread across the rest of Europe when the regulatory environment allows. So, again, he's painting a picture of long-term global expansion of AI infrastructure, not just in the US but everywhere. Finally, the interview closes with crypto. Dan mentions he was just in Washington, meeting with lawmakers alongside big names like Michael Saylor and Tom Lee to talk about crypto regulation. His big message? Crypto isn't going away, it's just the start. He emphasizes the legitimization of crypto, especially as lawmakers get more serious about frameworks. But what's really interesting is where he connects it to AI. He talks about Arco, his company, and their project at the intersection of AI and crypto. He describes it as human-proof technology, tied to identity and authentication, and he stresses that this intersection, AI plus crypto, will be a critical layer in the digital economy moving forward. To him, Bitcoin and Ethereum may dominate payments and platforms, but what Arco is building is more like infrastructure for the AI revolution. So, to summarize, Dan Ives is bullish on Nvidia long-term, despite short-term geopolitical noise. He sees Chinese internet stocks benefiting from domestic AI push, US tech giants gaining ground in the UK because of friendlier regulations, and crypto moving from fringe to mainstream with AI crypto hybrids at the center of future growth. In other words, the themes are consistent. AI is the revolution of our time. Nvidia is at the center of it, but the story is global, not just American, and crypto is becoming part of that story too. Before I reveal the 2 best industrial stocks to buy right now, let's talk briefly about your investing education. Smart investing isn't luck, it's knowledge, strategy, and discipline. That's why the Value Stocks Investing Master Course is our sponsor today. This course transforms you from novice to confident investor. Learn to find undervalued gems and build lasting wealth. It breaks down complex concepts into simple, actionable steps. You'll master financial statements, intrinsic value, and growth catalysts. Packed with real-world case studies and expert insights. Self-paced, accessible anytime, anywhere. One great investment can change your future. This course helps you find it. Click the link to learn more and enroll. Now back to the action. Now, let's reveal our first industrial powerhouse, Vertiv, ticker symbol VRT. While the world is captivated by the dazzling breakthroughs in artificial intelligence, there's a lesser-known story unfolding behind the scenes. Vertiv is the unsung hero, quietly enabling the AI revolution from the ground up. Think of Vertiv as the ultimate picks and shovels play for the AI gold rush. While others chase the next big algorithm or chip, Vertiv is building the essential infrastructure that makes it all possible. Their products and services are the backbone supporting the explosive growth of data centers worldwide. Vertiv is a global leader in power systems and thermal management for data centers. As AI workloads surge, the demand for reliable, efficient, and scalable infrastructure has never been higher. Vertiv's solutions ensure that the world's most advanced computing facilities stay online, cool, and secure, no matter how intense the demand. Imagine AI chips as high-performance race car engines. They generate enormous amounts of heat as they process data at lightning speed. Without advanced cooling and power management, these chips would overheat and fail. Vertiv steps in to keep these digital engines running at peak performance, using cutting-edge cooling technologies and robust power solutions. But Vertiv isn't some flashy startup chasing trends. It has deep industrial roots, having been spun out from the legendary Emerson Electric. This heritage gives Vertiv decades of experience in mission-critical systems and a reputation for reliability that's trusted by the world's largest companies. After a strategic restructuring, Vertiv returned to the public markets at just the right moment, right as the data center boom was accelerating. Investors took notice, and Vertiv's stock has become a favorite among those betting on the infrastructure behind the digital age. What sets Vertiv apart is its unique blend of industrial reliability and cutting-edge innovation. The company is constantly evolving, developing new solutions to meet the ever-changing demands of AI, cloud computing, and hyperscale data centers. Vertiv's product lineup is vast, ranging from uninterruptible power supplies and battery systems to advanced liquid cooling technologies that can handle the most extreme computing environments. Their engineers are on the front lines, ensuring that every server, every rack, and every facility operates at maximum efficiency. It's no wonder that tech giants like Oracle, Microsoft, and Amazon are placing massive orders with Vertiv. These companies rely on Vertiv's expertise to keep their data centers running smoothly, supporting everything from cloud services to AI-powered applications used by millions. Every new data center, whether it's a sprawling hyperscale facility or a compact edge site, needs Vertiv's critical infrastructure. Their solutions are the foundation upon which the digital world is built. Vertiv is more than just a supplier, it's a trusted partner, working hand-in-hand with clients to design, build, and maintain the digital ecosystems that power our modern lives. As the world races toward an AI-driven future, Vertiv is quietly powering the transformation, one data center at a time. This company is the invisible force making our digital dreams a reality. Let's talk numbers. Vertiv's growth is explosive. In Q2 2025, organic orders grew 15% year-over-year and 11% sequentially. The book-to-bill ratio hit 1.2. Orders are outpacing shipments. This backlog guarantees future revenue growth. Analysts project Vertiv sales to surge 25% in 2025, with another 16% growth in 2026. This is high-octane growth for an industrial company. The market opportunity is massive. OpenAI and Oracle alone plan to invest $300 billion in computing power. All that spending flows to infrastructure providers like Vertiv. Vertiv is perfectly positioned to benefit from this tidal wave of investment. The AI and data center boom is just beginning. Vertiv holds the golden ticket. This is a growth story you can't ignore. Let's see what's next. What's next for Vertiv? In a word, domination. We're at the start of a multi-year AI investment cycle. As AI spreads across industries, demand for computing power and Vertiv's infrastructure will soar. The market is expanding fast, giving Vertiv a long runway for growth. New AI chips are hotter and denser, pushing data centers to adopt advanced liquid cooling, Vertiv's specialty. This shift means higher margin products and more profit. Vertiv isn't just riding the wave, they're enabling it. The need for robust, scalable data centers will only grow. Vertiv's diversified business touches every part of digital infrastructure. Strong heritage, market leadership, and exposure to the biggest tech trend of our time. Vertiv is a premier tech growth stock in disguise. The market is just waking up to its potential. Now meet our second titan, Taiwan Semiconductor Manufacturing Company, TSM. If Vertiv is the body of the AI revolution, TSM is the brain. TSM is the world's largest and most advanced semiconductor foundry. Apple, Nvidia, AMD, and Qualcomm all rely on TSM to manufacture their chips. Founded in 1987, TSM pioneered the pure-play foundry model, letting others design while it perfected manufacturing. TSM's edge is its technological supremacy, years ahead in process nodes. It manufactures at atomic scale, producing the world's most powerful AI chips. This leadership is TSM's moat, built over decades and trillions in investment. TSM has pricing power and a captive customer base of tech giants. Investing in TSM means owning the most critical choke point in global tech. It's one of the most important companies on the planet. Let's look at its dominance. TSM's dominance is staggering, over 60% of the global foundry market. For the most advanced chips, its share is over 90%. A near monopoly. This control gives TSM unmatched strategic advantage and financial strength. Demand is insatiable. Tech companies pay top dollar for TSM's capacity. Revenues from high-margin nodes fuel more R&D and new fabs, extending its lead. Every major tech trend, AI, 5G, autonomous vehicles, needs TSM's chips. TSM is the primary enabler of the digital economy. Geopolitical risks exist, but TSM is diversifying with new fabs in the US and Japan. Its technological monopoly, cash flow, and critical role make it a compelling investment. TSM is a blue-chip titan with room to run. Let's talk about how you can invest smarter. Here's your invitation. We've uncovered two companies set to dominate the new industrial landscape, Vertiv and TSM. But finding stocks is just the first step. Knowing when and how to invest is key. That's why I invite you to check out the Value Stocks Investing Master Course. It's your roadmap to building a resilient, long-term portfolio. Learn fundamental analysis, spot undervalued opportunities, and invest with confidence. For deeper insights, join my premium Patreon community for exclusive watch lists, reports, and early alerts. Get direct access to my analysis and join a network of passionate investors. Combine the course and Patreon for an unstoppable edge. Click the links below to enroll and join our community. Your journey to becoming a master investor starts now. Let's wrap up. In today's rapidly evolving world, two juggernauts, �値𝗏 and TSM, are perfectly positioned to ride the wave of the AI and data center boom. As technology reshapes every aspect of our lives, these companies are not just adapting, they're leading the charge into a new era of industrial innovation. �値𝗏 stands as the essential infrastructure provider, ensuring that the backbone of our digital world remains strong and resilient. Meanwhile, TSM, or Taiwan Semiconductor Manufacturing, is the undisputed king of advanced chip manufacturing, powering everything from smartphones to supercomputers. Investing in these companies means placing your bets on the very pillars of the new digital economy. They're not just riding trends, they're building the foundation for the next generation of technological progress, making them strategic investments for forward-thinking portfolios. What sets �値𝗏 and TSM apart is their ability to deliver real, tangible products that are in massive demand. Their competitive advantages, or moats, are clear: deep expertise, global reach, and a relentless drive for innovation. The AI revolution is not just another tech trend, it's the most significant technological shift of our lifetime. From self-learning machines to intelligent automation, AI is transforming industries at a pace we've never seen before. And at the very core of this revolution are companies like �値𝗏 and TSM, providing the critical infrastructure and components that make it all possible. The opportunity to invest at this stage, when the groundwork for decades of growth is being laid, is truly rare. Most investors only recognize these moments in hindsight. Don't let this one pass you by. The future belongs to those who act decisively when the signs are clear. You have a choice: watch from the sidelines as others seize the moment, or take action and position your portfolio for the future. The path to long-term wealth is paved by those who recognize unstoppable trends and move early. History shows that the greatest fortunes are built by investing in transformative trends before they become obvious to everyone. Early investors in past revolutions, like the internet or mobile technology, reaped extraordinary rewards. The AI and data center boom could be the next chapter in that story. The time to act is now. Every moment you wait is a missed opportunity to be part of this technological transformation. Don't let hesitation hold you back from what could be a life-changing investment. I want to hear from you. Which company excites you more? �値𝗏, with its critical infrastructure solutions, or TSM, the powerhouse of semiconductor manufacturing? Share your thoughts in the comments below and join the conversation. If you found this video valuable, don't forget to like, share, and subscribe for more insights and investment ideas. Your support helps us bring you the latest trends and opportunities in the world of technology and finance. Thanks for watching. Stay curious, stay invested, and see you next time.